Hey everyone, I'm Josh Galvin, this is Bob Gibbs, and this is episode 7 of The Truth in the News. And today we have 2 articles from CNN Money. One of them is about the mortgage qualification process and how that's changed in the past few years, pretty much since the real estate market in 2007. And then the other one's about the uneven housing recovery. And we want to share both of these articles today because basically one of them for buyers right now, if you're like in the market looking at homes online or anything, this mortgage article is going to be extremely important for you to understand about the qualification process. Extremely important because it's not the same as was even last year and even the year before that. It's changing rapidly, getting pretty tight. And then the other article is about the uneven housing recovery. And this ties into our other videos. We've been talking about inventory. And one thing, here's the article, but basically it's talking about how we're seeing a housing sales recovery and all this stuff, and it kind of gave some data about we're even in the midst of all these, and to quote them, a river of foreclosed properties continuing to flow, meaning even with all these foreclosed properties hitting the market, we're seeing an uneven housing recovery. And as Bob will point out, this is kind of jumping to a lot of uneven conclusions a little too fast, we feel, so we want to address those that you need to be aware of before you jump to your own conclusions about this kind of data. So let's just jump in, right? Which one do you want to start with?
Well, let's go with the uneven housing recovery.
Cool. So what was the main meat then of this article that you were saying that people need to be aware of?
Well, what was being reported is that we saw home sales actually increase across the country from February to March of this year by 3.7%. But they did make the point to point out that in spite of that increase, we're still down 6.3% from a year previous. And the quote was that, as you mentioned, Josh, even with a river of foreclosed properties continuing to hit the market. And I have actually a serious issue with that because we've actually seen foreclosures drop each year for the past 3 years. So there is no river of foreclosures that are hitting the market. Yes, there are foreclosures, and I'm not saying there aren't a lot kind of backed up, but they aren't hitting the market now, so that really isn't what is affecting the price so much.
So this article was saying that that we're seeing an increase in sales and pricing, even with all the foreclosures hitting, when in reality, are they actually hitting the market?
Right, they're not. They're not in this area of California.
Not yet,
sure.
at least. Because that's why check out our other videos where we talk about.
Yeah. I think we are going to see some hitting, but we're not hitting yet. So what is it that has us still down 6.3% from last year, even in spite of the fact that sales are up from last month? And I think it's more of a fact that there's not enough inventory on the market. That, and it has become more difficult for first-time home buyers to get homes and to get loans. But inventory is actually down, and it's been down for a while now.
Yeah, I see.
And so the fact that people just don't have homes to buy is one of the issues.
Oh, okay. So that's like basically this is the truth in this article isn't really that it's not that they're misguiding. They're just kind of, what would you say is like
it's
the main
incomplete.
Okay.
Yes, it's very incomplete. So you can jump to the conclusion on this one that well, even though sales have gone up from last month, we're not as strong of a market as we were last year, and I would argue that in fact we are. And the issue about number of sales has more to do with lack of inventory than anything else.
Okay, but now, all right, so since this is on video, and this is online, let's fast forward 3 months to someone maybe watching this in the summer. Can we really say the same thing at that point?
All bets are off on that one.
Exactly. Because what's the one? What's the one caveat? What's the big thing that?
Well, the number of distressed properties that are kind of back there waiting. As I mentioned last time, I showed you a stack of stuff that's new notice of default, which is the start of the foreclosure process, and there's a lot of those back there. So, bank policy to date has been, for a lot of reasons, just to kind of trickle them onto the market, but. They may decide to change their mind and dump a few on there. In the future.
So then the main meat of this one would be this article is talking about foreclosed properties continuing to flow, but in reality, the notice of defaults and the foreclosure filings are flowing, but the actual homes hitting the market, that's not really happening just yet.
No, that's absolutely true.
So that's where you have to. You can't really address anything about the market until you address that issue.
That's right.
Would that be a conclusion?
That's right. So the thing that makes it a little bit tenuous is that when these things do start hitting the market, in what form will they hit the market? Will it be a short sale or will it be a foreclosure? And in what volume?
Okay, so as a seller, what do you need to be aware of with this article about the uneven housing recovery? When anytime you hear housing, if I'm a seller and I keep hearing about the housing recovery, what should I really always ask the question? What question would you tell them they need to ask about the housing recovery, that any kind of data they're reading?
Yeah, it really is, are prices going up and is inventory going up or is it going down?
Okay.
Because it's pure economics at that point.
Yeah.
If inventory is going down and prices are flat or starting to go up, you can say, well, it doesn't really tell me a whole lot. If you're seeing inventory going up and prices going up, that's a true recovery.
Oh, okay. And right now we're just seeing inventory. Where are we at right now in terms of
inventory is low, prices are pretty flat.
Oh, okay, so that's too, okay, I see what you're saying.
Right.
So it's not accurate. You can't jump to housing recovery topics without seeing a bigger picture.
Right. And if you take a step back and just talk to 10 different economists, you're going to get 10 different
yeah, right.
Ideas of where we're at as
Yeah.
far as our recovery and our pulling out of
Yeah.
the recession we were in.
But, regardless of any economist or anybody you talk to, so there's one simple fact: supply and demand does not lie.
No,
right?
that's wrong.
No matter what you do, it's like supply and
Yeah.
demand is the ultimate truth that you can't escape. It's
Yeah.
common sense. More inventory, same amount of buyers equals less
Lower
prices.
Yeah.
Yeah, just basic supply and demand economics. So you don't have to be a rocket scientist to get that. So don't let any of that stuff confuse you. So I think that's good enough at that point, right?
Yeah.
I guess you want to jump into this mortgage article. So
Yeah.
what's the main meat of this article? It's titled "Mortgage Denied, Sometimes for No Good Reason."
And this is actually very true. And what's happened with a lot of the banks is that they've tightened their lending requirements to the point that it's people that are good qualified buyers are being denied mortgages for things that are very, I would say, nitpicking.
Mm-hmm.
Here's one thing. In 2009, someone could have a debt to income ratio of 55% and still get a loan. That means that their total debt compared to their income level is at about 55%. Now they've reduced that requirement. Now it's 45%. So they've made it tougher for people to get loans.
Okay, so just to quickly understand that part more. So if someone makes $10,000 gross income a month,
right?
Last year they were allowed to have $5,500 in debt, and then they were still able to get a mortgage.
Right.
But now they've lowered that debt number to $4,500. Let's say, going with that example.
Right. So
that's
so
it's
just
getting
one,
tighter.
Yeah, and it's just one of a few different things that have been enacted over the last couple of years to make it really tougher on people to get loans. The minimum FICO score for someone has increased.
Yeah.
I mean, you can get loans with what used to be really good FICO scores, like in 700 or high 600 is tough, even though they say that they'll loan at that rate. Good luck.
Yeah.
But in the low 700s, it used to be really good FICO scores. You're having to pay more money now to get a loan.
Oh, okay. So what's the number we saw? There was a number about 7.
Yeah, for conventional mortgages, the average credit score has gone up to 760 from 720.
And that's like the ideal.
Right.
Okay.
Right.
That's a pretty high number. So
it's
then
significant. Yeah.
So then, as a buyer right now, looking online, which is where most buyers start. 100% of buyers start online, obviously.
Right.
So what do you tell that buyer right now that's thinking of buying? What should they really be doing?
And I've said this before, and I think it's even more important given the fact that it's become much more conservative as far as the requirements for getting loans. But before you really start seriously looking, you really need to talk to a mortgage broker or your bank and go through the full loan approval process, so you know exactly, number one, if you're going to be able to get a loan, and number two, how much you're going to be able to get a loan for. Some people go into the home buying process with an idea of, I'm going to be able to buy $1 million house, and then once they see a home they like, then they start talking to a lender, and it turns out they can maybe buy a $600,000 house.
Yeah.
That's a big deal on a lot of different levels.
And that's happening a lot, right?
It does happen a lot, and it's a big emotional letdown, because if you're looking at $1 million house, and then all of a sudden you have to look at a $600,000 house, there's a big difference between those two homes.
Yeah, big time, right?
Yeah, you're not going to be happy.
Yeah, exactly.
So
You're
better off knowing before you start looking, and then start looking.
Okay, so that makes sense.
Yeah.
So then, it actually it comes back to a little bit of more common sense too. It's like if you're online looking, a lot of people are scared to talk to mortgage people because they don't want to get sold. It's always that concept. We understand that, but at the same time, it's like, well, things have changed so much. You can't just have a heartbeat and get a loan anymore. It's not.
Right.
There's a lot of we didn't even cover really everything that's in here. That was just one example.
Right. What I would encourage you to do, because it doesn't cost anything to go through the pre-approval process, and if someone says they're going to charge you for it,
Go to another lender. Yeah, go to someone else.
Just contact us on the website, and we have lenders that are very good. They're not trying to sell you on anything. They're just going to give you the real information that you need to make a good decision.
Mm-hmm. And put it like this: there's something you need to understand about lenders as well. They're not really trying to sell you on anything because their whole job is to make sure you can actually close something.
Right.
So it's like they're not going to really try to get you in and just like try to keep you hooked, and all of a sudden tell you, oh, it doesn't work, because that'd be wasting their time as well. Yeah. So keep that in mind.
Yeah, think of them and us, actually, for that matter, as consultants. Mm-hmm. Especially on the buyer side. I mean, our services really, from our real estate side, those are free to you. On the lender, there may be some points and fees you have to pay during the loan, but they'll go over all that stuff with you. The process of getting pre-approved, though, that shouldn't cost you a dime.
Yeah.
If you get a good lender, and just like I said,
at least to get an answer like, what do I qualify for? How much am I paying? Those are the two questions that you pretty much need to know.
And then at that point, once you know that, then we can go out and find your house.
Yeah, cool. So those are the two articles. Tune in for the next one and contact Bob for all the questions and everything. All right, take care.